Hey, listeners, welcome to the pre Diwali stream of the Offline Network. Today, we are talking with Eklavya Gupta of Recur Club. Eklavya, it's great to have you on the show. I've heard great things about you from common friends, just never had the chance to talk to you. And here we are. How's it going? You guys just announced your Series A. Congratulations on that milestone.
Thanks. No, likewise. It's great to be here, and thanks for wishes.
Eklavya, so break us down. What does Recur Club do? First time many of our listeners might have heard that name. So just maybe a 1-2 minute summary on what the business is doing right now.
So, Recur Club is an AI native debt marketplace where we are a one-stop shop debt solution for startups and SMEs. Whether it's a working capital solution, long-term debt solution, capex financing, acquisition financing, right? Like different kinds of debt solutions. You think debt, you think Recur. That is where we are. We leverage technology significantly to save on time, cost, get the best offers from multiple lenders integrated on the platform.
And how is it different from, like, say, I mean, I'm just going to make it easier for our listeners as well, or for them to understand. Bank financing, venture debt, like this asset class has many forms of debt available, right?
Right. No, absolutely. So I think particular company, right? Like you're absolutely right, can take multiple forms of debt financing. But whether they are eligible for a bank debt or not, people don't know. They apply to a bank, they take hours, weeks, months at times just to realize that they were not only eligible for a bank loan, right, at that point in time. So from an asset class point of view, A is your strength of cash flows, right? Like if your cash flows are good, if your revenues are good, you can leverage those cash flows and revenues to actually upfront that capital and get money today, right? Like that is one solution that we offer. You don't need to raise equity. You don't necessarily need to, have large investors or securities, basically, right? That a bank may ask at times. So it's purely cash flow financing from one product point of view. But we have also launched multiple products. Let's say you need today bank financing, as you said, you need venture debt, you need recurring revenue financing, you need supply chain financing, right? Like you need to open up more stores. If it's a D2C brand, they need to open up more stores. You need financing to open stores, right? Like because there is a capex fit out setup, right? You can get that. So think of a use case where you need money to grow your business, where there is predictability. You can come to us and we will help you structure and curate the best debt solution through technology, right? Rather than going to 10 different places, it gives you aggregation of the right structure, right product at one place.
On your website, Eklavya, there's a distinction between two products, and from a distance, one looks like a small facility, the other looks like a large debt facility. Can you tell us a little bit more?
Sure. No. So we have two products, Recur Swift, which is let's say up to 10 crores of financing. They're primarily for startups above, 5 crore annual revenue or who have raised 5 crore equity. That's a quick, fast recurring revenue financing product that I was mentioning, right? Where you can leverage your business cash flows to get money today, and then you can pay as your customers pay, right? There you can get capital within 2 days, up to 10 crores depending on your business metrics. Typically you get up to 25 to 30% of your annual revenue in terms of overall leverage in that product. There are no securities etc involved in that, so it's a very fast moving simple product where you can leverage your business cash flows. The other product is debt between 10 to 100 crores. These are typically for, if I talk about startups, Series A plus. If I talk about SMEs, these are more mid-market companies, where mid-market includes, or small and mid-market, we are saying companies above 50 crore annual top line from an SME point of view are also eligible for. These are more little secured, partially secured kind of debt products or a supply chain financing solution that gives you larger quantum, but obviously more security involved, and that takes typically up to 3 to 4 weeks end to end to get you that capital.
When we talk about Swift, who is a good candidate for that product, Eklavya, and who's not a good? We're talking about startups here. Who's a good candidate for that product? Who's a bad candidate for that product?
So I think everyone is a good candidate at a point in time. I would like to say today, like someone with a 5 crore annual top line at least, right? Like or who have raised at least 5 crore equity capital they have like a runway of, at least 6 months, right? Like it should not be they are very tight in terms of their cash position. Debt is not a good option at that point in time because it can only land you to trouble unless you have predictability, uncertainty on equity that's happening. Typically someone growing at, let's say, at least 20% year on year, right? Like because these are early stage companies, so it tells a lot on the product market fit.
Is it
uh,
20% less annually, year on year?
yeah, that's like just the benchmark. You're absolutely right. Typically, what we have seen that companies that have taken Record Swift in early stage are growing 110% with us year on year, right? So that's been on average across 700 companies in that segment that we have funded. But just as a benchmark, because cycles are different, right? Like it could be seasonal, it could be cyclical, it could be different turn. We don't want to negate those companies because some of them can still be eligible for debt from that point of view. Not may not be for equity at that point in time, but that becomes an interesting option there. And someone who has, like, let's say, the unit economics of the product market fit setup, right? How we determine that is like there is predictability in terms of either if it's a tech company or SaaS company or a B2B company, LTV to CAC is sorted, right? Like at least 1.5x. Ideally, companies have 3 to 5x LTV to CAC that we have evaluated, but just as a bare minimum bottom line, right? Like if I may say, if it's a D2C company, then ROAS is at least greater than 1.2x again, right? Like so things like that, or the cash conversion cycles is, let's say, less than 100 days, ideally. So some of those parameters become important for you to qualify. And then this is the cash flow you generate. At the end of the day, every financing is linked to cash flows, right? If you can generate that cash flow, even if you are burning, at least operating cash flow, and have a path to generate operating cash flows to service that debt, that becomes an option, right? Like, but if you are running hand to mouth, we advise people against, right? Like, get your business sorted, equity sorted, and then come for debt solutions is what startups should
Are you
consider.
always able to match the repayment terms to a company's cash flow, Eklavya?
We try to, right? Like that's the endeavor. That's our model that we have built in, right? Like we see historical trends, our technology model, forecasts, does a lot of statistics to actually fine tune and streamline those repayments, right, towards business cash flows basis our assessment. So that's the endeavor, so that the companies don't really have a fixed obligation, and they are able to service.
And we're
We
heading
grow, they grow. So that's our mantra, right? Like so.
and we're heading into festive season. Is it correct to assume that heading into the festive season, people have been lining up?
Disbursements must have gone up for
Yes.
sure. Or
Is
no?
No, absolutely. I think
busy time for business?
last couple of months, from a consumer brand's point of view or an e-commerce brand point of view, we have seen a great amount of demand, right? Like a lot of brands do like 50% of their business in one quarter, as compared to the entire year, right? Like so, this is the strength, and especially with advent of quick commerce, we are seeing people go crazy for their consumer buying, business buying. So we have seen significant growth in the last 2 months from D2C brands as well as e-commerce brands, in the terms of debt demand, which is primarily used to procure last minute inventories, manage the receivables if they are delayed from either of these marketplaces or directly to some distribution channels. So these are typical two use cases that they come to us because we can disburse money very quickly to them in this point in time.
And I mean, given that you have a close view into the sales of many of these brands. I mean, you mentioned, I think, 700 brands that you work with or consumer businesses. In terms of just Diwali spending last year versus this year, are you observing an increased spend, more muted? Like, what's the sentiment overall amongst the brands and the consumers?
I think it's because we work with a lot of online first brands, right? Like I think so definitely there is a pickup in demand in online first brands. Can't really say much about offline, but if I were to use that as a proxy, we are seeing like at least just better consumer growth as for online brands this year as compared to last year, for sure.
Interesting. And the 50 million that you've raised, given that you mentioned debt being a core piece of the business, most of it was debt, as
Yeah, so it was 8 million equity, 42 million debt from part of the round.
interesting.
Lots of serious questions and serious answers. Eklavya, how was your GFF experience? Were you there?
Yeah, we were there. GFF, it was quite good. As Recur, we spent a lot on AI, right? Like, so we are an AI first company. We met a lot of interesting fintechs doing a lot of things. It's an ecosystem where we met a lot of lenders, a lot of VCs, a lot of investors, a lot of partners, a lot of customers. So all at one place. So it was really good, from that point of view.
So, two follow-up questions there. Number one, where do you embed AI in your workflows and your technology? And number two, fintech is, no matter what someone might say, a very collaborative business. So, you were just at GFF. Typically, to build a business, bring it to this scale, who are the different partners you need to have on board?
Great. No, I think so. We leverage, AI from data gathering point of view because, in the segment where we are, data takes a lot of time, right? Like to gather information, find out the missing informations, right? Read those financial statements and give an output summary, create an underwriting profile, and then do an, AI-based matchmaking with multiple lenders because we sit at the center as a platform. There are borrowers, as stakeholders, our customers primarily, and then there are lenders on the other side. So these are the two stakeholders of the platform, and we use technology to actually, speak to both of those parties, which is typically done offline and takes a lot of operational efforts. So we're bringing that operational efficiencies. Plus, from a credit risk and modeling point of view, we use a lot to undermine what is the real truth, etc., from a technology point of view. So I think those are the two biggest use cases that help us actually disburse in Swift, let's say, in within 48 hours to get two term sheets, as well as in 3 weeks to, for a secure transaction there.
And I mean, term sheet in 48 hours, but underwriting journey must have gone through a lot of changes, right? What are the learnings in the last, I think, say, 2 years?
So I think you're absolutely right, right? When we started versus the macro cycles, they significantly impact the growth of the growth journey of a brand, right? Especially when we fund typically between 12 to 18 months kind of products, right? For startups, especially. So we need to be very cognizant of the macro cycles that eventually impact, right? Like also about unit economics from every brand, right? Like now we go into depth of unit economics of a sector, like sometimes to check whether this was fake or not. We check margins across different companies in that particular sector, right? Like and then benchmark it to create our own underwriting results and outputs. So that has taken a significant change, that other than just the financial metrics of a company, that hey, here is your revenue, here's your margin, etc. We were always doing due diligence of from bank statements, GST. That's very, very important, right? To determine what's actual the truth. Sometimes the founders even don't know what the true cash cycles are, to be honest, right? Like they believe everything is good, they're profitable, but they spend a lot of money on working capital there. So that's also one of those problems. So definitely that is one of the things that has been taken into account for us from an underwriting point of view quite a lot. Plus, whether people are selling online versus offline as a distribution channel, and hence it determines their margins, ability to grow from a D2C brand point of view significantly changes. And AI, right? Like we have seen a lot of SaaS. We were very heavy on SaaS 2 years back. Those businesses have taken a tectonic shift, right? Like in terms of their viability, their existence. Some of those models are irrelevant now, to be honest, right? Like people are pivoting, people are creating new things. So we have gone cautious on SaaS businesses till the time they figure out, right, like of the change and the impact that they have. So those are the three fundamental changes in the startup segment that we've seen.
More a macro perspective as well, the SaaS thing.
Absolutely.
Or is getting affected. But I mean, so RBI as a regulator also keeps a close check on the credit in the system, right? Sometimes tightening it, sometimes loosening it. What's your read on the credit market right now?
So I think I really respect RBI as a regulator, to be honest, individually. Even when I was earlier working before Recur, and now I've closely seen them. I feel being two steps ahead, right? Like while it may feel restrictive at times, but personally, if you compare it to other regulators, we've always maybe a little conservative. One can argue, but they've been on the right side. Whether you see the 2008 economic crisis, right? Like India was still safeguarded, and that was primarily due to RBI's monetary policy at that point in time. From a credit growth point of view, we are in an interesting phase, right? Like commodities going high, one needs to check on inflation, etc. Now they've cut down repo rate significantly in the last 6 to 9 months to boost growth, right? Which will inflation had come down, etc. So I think they are playing it well from our perspective. Credit demand is slowly picking up for sure. If you see last quarter versus the previous quarter, it was 10% higher from a credit growth point of view. So it's slowly picking up, but it's still not the best, right? Like people are still on the wait and watch mode from a global macro point of view. There was an impact on tariffs, exports to a few companies. So if I see the overall credit demand, there's definitely a mix and match. But I think RBI, to me, or to us at Recur, seems to be quite transparent and clear, right? Like and wanting to get things in the right manner.
Eklavya, final question before we let you go. What can customers expect from Recur Club, in the final months of 2025, going into 2026? What's new? What's going to be new?
So I think more capital, we are trying to get it, even faster than 48 hours or 3 weeks for various products. Plus, we are opening up a segment where customers can come and take advice from a capital stack point of view, right? Like I think so. Even if you don't want money, you want to be debt ready. You can knock our doors. We'll be happy to help via our product and our team to help you guide what is the right, because this is the time when people start thinking of AOPs, etc from next year point of view. So we'll be happy to do that, and we'll be opening our doors for that.
Awesome. Anirudh, thank you so much. Eklavya, thank you so much for coming on the show. Really appreciate it.
Thanks.
Thank you so much for joining
Thanks.
us. All the best.
Bye.
All right, folks, we've heard about debt. Now let's focus on Sahil Jain, who's going to tell us more about his journey at Dine Out and also the new company that he's raised capital for. Sahil, welcome to the show.
Hey, hi Utsav, how are you?
Good to have you on the show.
Hey, Sahil.
Quickly, our listeners who are tuning in, you've announced a seed round. What's the story? What does the business do?
So basically, the medical travel company is a platform that we built to bridge a medical travel as a category from the Western world to India. So what you all might know is that a lot of people in India come for medical travel, majorly from countries like Africa, the Middle East, Bangladesh, Afghanistan, and it's pretty unorganized. It's been happening for the last sort of 20-25 years. So I think post our acquisition and while we were at Swiggy, both me and Ankit got thinking as to what's the next thing that we want to build. And I think healthcare had been on our minds for the last 3-4 years, especially post COVID. And we, I think, did a bunch of research in terms of what is it that we want to build. And we realized that we looked at, the verticalized healthcare sort of opportunities, whether it's pain management, diabetes, those are big categories as well. But I think from our strength perspective, we realized we wanted to build a global platform, and we saw medical travel as a massive need, right? It's a $100 billion industry, completely unorganized, no full stack solution available to patients, and people are struggling. And from our days, having spent time in the US and UK respectively, we realized that medical outcomes or healthcare was a big challenge even 10-15 years back. But what has happened is it has accelerated further, and the healthcare crisis in the Western world has gone from X to 10X, right? Probably especially post COVID, right? I think India handled COVID really well. Whereas if you look at a country like UK, for example, COVID and Brexit hit them really hard. And today the NHS is struggling, right? So there are more than 8 million people on the NHS waitlist to get a elective surgery done. A simple knee or a hip replacement is a 2 to 3 year wait in the UK right now, right? So the option as a patient you have is to either wait 2 or 3 years, get your surgery done for free via NHS, or go private and spend 25,000 pounds, right? Which a lot of people can't sort of afford. That's when we saw that there's this opportunity to build a Western world to India sort of a bridge. And we're starting off with UK, India, where we're focusing on a few categories like orthopedic, IVF and gynecology, dental, aesthetics, urology, etc., where we are doing a full stack solution. And I can talk a bit more about it, where we've got doctors in UK who are looking at patients before they travel and after they travel for pre care and post care. uh, because the biggest problem in medical travel we saw is that once people travel and they come back to the home country, if something goes wrong, even if there's a 1% chance, right, nobody wants to look at them. So that's where we built a platform where we brought home country doctors to be an essential part of the patient journey before they even travel. And once they come back, they're available to them as well.
What's the price difference between like some of the categories or the average price difference or cost saved for
So
a patient traveling
if
from?
I were to say just the surgery piece of it, India is about 20% of what it would cost in the UK right now. So UK would be
So
5x.
1/5.
But if I take the combined, cost, which includes the travel and the accommodation associated with medical travel, it would still be 50-60% cheaper versus what you would pay in private in the UK, with almost better, or if not, if equivalent, if not better, sort of outcomes compared to the UK, because we've got the best doctors in India right now, right? So
But India may, I mean, the number of beds per patient or
yeah,
per 100 patient is already strained, right? We're already, I mean, very much under capacity.
correct.
So, I mean, do you think like this will strain the system even more?
Not
Like
really. See, the thing is, what is
medical
strained
tourism in general? Yeah.
yeah, see, what is strained in India is the lower segment, right? So when you go below a certain segment where you've got your public hospitals and rooms which are of lower categories, etc., that is where the capacity is strained, right? But if you go higher up where you've got the private hospitals where there are single rooms and better quality rooms, etc., there is enough capacity to take in more patients, right?
And
And
are you mostly focused on elective surgeries and elective
absolutely,
procedures, Sahil?
like
And in private healthcare?
in private healthcare. See, because emergency, you can't get them to India, right? It's going to happen
Yeah.
in their home country, right?
That's
So
an airlift business. That's a different business
yeah, that's a
altogether.
completely different business. So we're focused on elective surgeries because that's where the market is for medical travel, right?
Yeah.
Nobody's going to travel when there's an emergency.
Also break down for us that for an incoming medical tourist in the host country beyond the point of care, what other needs do they have?
Exactly. So that's a very good question. So the problem is that today a person who's coming for medical travel spends only 20% of their time in the hospital, right? 80% of their time is spent outside the hospital. And that is what most people miss, right? So if you're coming for a knee replacement to India, and let's say you go to a Max or Apollo, you're spending 4 days in the hospital, but you're spending 20 days outside the hospital. And that's where the experience breaks for the patient, right? And that's what we've changed with the medical travel company, because we built our own aftercare center or a step down facility where people can sort of recover in peace, right? So today people have to go to a hotel or to a guest house where there's hardly any medical service available. What we built at the aftercare center is that you've got a 24/7 doctor, a nurse, a physiotherapist, a chef, a nutritionist. So you get a full VIP service. You get picked up from the airport with a chauffeur driven car. You don't have to worry about anything, right? And when you go back, what we built, which is something new, is for the first time a post surgery insurance product. Now, the biggest problem is once you go back to your home country, like I said, nobody wants to look at you if something goes wrong, right? And that's what we've taken care of, where once you go back, the body part you came to India for, it's covered for the next 12 months back in the UK, right? So if you come for a knee replacement, then your knee is insured back in the UK for 12 months for something as small as a physiotherapy session to the worst case. If you need a resurgery, you can go to a private hospital in UK, no additional cost, and it gets covered for you with no waiting, right? So that's a massive peace of mind we're offering to the patient, which they usually don't have if they travel of their own accord, right? There are multiple cases of people traveling from UK to Turkey, Poland, Lithuania, coming back with botched up surgeries, and the UK media is full of it. And that is where they face a challenge. That's where the negative publicity comes in, right? And that's where we are trying to come in and sort of change it and do it in a full stack manner.
And can you take us behind the scenes? What did it take to get these sort of cross-border partnerships? And assuming it wasn't easy.
No, I
Yeah,
think
because all of these markets will be different. I think you've mentioned Australia and Canada and other markets as well. At Dine Out, you were focused purely on India restaurants, one single market. But here, I think you're just will run into different healthcare systems, right?
absolutely. See, while the regulatory issues and the regulations could be different in every country, the problems remain same. So what we realize is that whether it's the UK, the US, Canada, or Australia, the challenge remains the same, right? That there is very limited either infrastructure or staff available in these countries to deliver point of health services, right? At the point of delivery, there's lack of staff or lack of infrastructure, which increases the cost. That's where all the healthcare inflation is coming from, right? For the insurer, for the patient, everyone, right? So the common problems remain the same for the patient or for the healthcare providers, right? What changes is the regulatory landscape, and that's why we're picking one country at a time. And we've picked UK at the moment, where we've figured out the entire regulatory structure, where we can do it in a very regulated manner. Why nobody hasn't touched UK till now is because of this, because regulations are extremely hard. Going to Africa and building a business is much easier because the regulatory structure just does not exist over there. Anybody can go and do it. So I think that's why we've chosen some of these markets, which is our moat.
And you've raised from a cricketer there, Ben Stokes and KL
Yes,
Rahul.
yes. So we've got Ben Stokes and KL Rahul and Jofra Archer who've come in to invest with us.
Okay. And I mean, just strategic investors, they're becoming brand ambassadors or
No,
just
so they've
helping
come in
you?
as, so along with Nexus, they've come in this round as strategic investors, because see, the primary reason is that these guys come to India for IPL, right? And they understand the Indian hospitality, the quality of service that they get, everything, right? And that is the reason why they know that the quality of healthcare infrastructure in India is great, and the kind of hospitality and the full stack service we can give, they truly believe in it, right? And that's why they sort of come in and sort of supported us.
And so you clear from day zero that this your second business was going to be a global business, Sahil.
Absolutely. See, after we worked on Dine Out and we got the exit with Swiggy, right? We realized that we built a massive business in India and with millions of users, right, who've been using and loving the product. The next step for me and Ankit was to build something which is global in nature, much larger. And I think the dream is to probably ring the bell at the NSE or the Nasdaq. So I think building a global business was something that was on the cards, and healthcare was something that was close to our hearts, and that's why we sort of figured out we'll pick something in the healthcare space.
And why was it close to heart? I know, I mean, healthcare touches everyone, but you chose restaurants first and now healthcare. So any personal motivation as well?
So yes, there were personal motivations. I think both me and Ankit saw some personal experiences with friends and families abroad, where there had been a lot of negative experiences that we saw. In fact, it was one of Ankit's very close friends in UK, where he was having his baby and saw that in this day and age, in the last 2 months they hardly got to see a doctor, and there was a stillbirth. Right now, that was something that we couldn't imagine in India. I had my second child, and we were practically visiting the doctor every sort of second week and having all the scans with all the facilities available. And not having that there in the UK was something that was a bit of a shock or a surprise to us. We never realized that something like this is possible. In fact, we were there and we met one of the professors in University of Essex, and he said he had to wait 2 years for his wife's gallbladder surgery. And I was like, I've not seen this in India. What's happening, right? And I think that's a massive issue which people brush under the carpet in the UK and other parts of the world, because that's how they've been attuned to believe by their governments over the last sort of 30, 40, 50 years, right? But I think the world is changing. The new generation, the Gen Z or whatever you want to call it, they're not going to wait for healthcare if it's not available in their home country. So I think over the next sort of decade or two, people are going to travel for better healthcare, which is more affordable with better clinical outcomes. And I think that's what we are building for, right? What we think is that like 2000 to 2010 was like the call center outsourcing era for the world. 10 to 20 was the tech outsourcing era for the world. The next decade will be around healthcare outsourcing, and India will play a key role front and center in terms of managing that load for the world. And we just want to be like first movers and build it in the right manner, because as you know, healthcare is a very different space compared to restaurants, right? It's about someone's life, it's trust, right? It's a slower business, right? And being second time founders, I think we thought we want to build a business where we're not just chasing some hyper growth, right? Something where we really build trust with the consumer and a long term business, right? And that's the reason why we sort of chose this space.
Sahil, in your view, what is it about Indian healthcare, in particular Indian private healthcare, that even makes this opportunity possible while global healthcare systems are just
Yeah.
crumbling under complexity?
A lot of macros, right? So if you look at the private equity money which is coming into Indian healthcare, it's insane. Practically top 5 or 6 of your hospital chains are all completely private equity owned right now, and they're bringing in more money. If you look at Max, Apollo, Medanta, all of them are adding about 2,000 beds each over the next 3-4 years across the country, right? So you're going to get 10-15,000 new beds at least across the major cities by these just top five groups. And they will want to sort of fill these beds, right? So they need more business and they are investing in quality infrastructure, right? So you're getting the best of robotic surgery, you're getting the best of equipment, the best of doctors. So they're exporting doctors back from the UK and US back to India. Most of the doctors now in all these top institutes are people or doctors who worked in the US, UK, Canada, Australia for the last 15, 20 years and are just coming back. So the whole reverse brain drain is very real, right? And it's happening right now. I've met like so many doctors from UK of Indian origin who probably went there in the 80s and the 90s, and half of them are ready to come back. So everybody wants to be back in India. That's the bottom line.
Are they better paid here, doctors?
Now they are compared to what they're paid there. So when they went in the 90s, obviously the pay was better in UK, but now the top doctors in India are much better paid than what they can be paid in the UK or anywhere else. And it's just not about pay, right? It's just even about just the whole
Opportunity and the
infrastructure,
ecosystem.
the recognition that they
Blank
get.
canvas and everything. Yeah.
Yeah, everything. It just all adds up, right? So
Yeah.
for them,
And
that's
so,
the driver.
Sahil, we focused, the bulk of our conversation on the incoming opportunity. Is there an outgoing opportunity for Indian medical tourists traveling overseas?
So
I hear
obviously,
Turkey is one place people go sometimes.
that's what we're trying to beat. So, so a lot of people from UK are going to Turkey majorly for hair transplant. Right? It's more
Okay,
aesthetics, right? So that's what
right.
Turkey, and I think they've done a great job building Turkey as the hair transplant destination for the world. Is one of the reasons why we felt that why can't we build India as the elective surgery capital for the world, right? So Turkey was a inspiration for us. In fact, the way they've built it as a the complete package, right? Whether it is tourism plus aesthetics or whatever you want to call it, they've done it the right way, and I think they've done a good job. I think India can build itself into the elective surgery capital for the world. In terms of outwards, I think that niche is always there. So there, from a HNI perspective, there will be certain sort of surgeries or complex surgeries around oncology where there's a lot of R&D, let's say in the US, etc., where people might want to go for. But I think beside out maybe some stuff around IVF, where in people from India are probably going to a Bangkok or a Cyprus because sex determination is a big thing. So in India, it's not allowed. A lot of people, again, for different reasons, people may be going out, but I don't think there is a major macro trend where Indians need to go outside of India for any medical travel, right? I don't think that need exists. It's for these niche categories where you might see some people traveling, but for 95% of the people or 99% of the people, I don't think there's a big need to travel outside of India at the moment.
So maybe final question: how do people get to know more about the travel medical company, both within India and so they can recommend it to their friends overseas and people overseas itself?
No. So basically, we've just started our marketing, I would say about 6 months back. We've just started off in the UK and we will be expanding to other markets also pretty soon. In India, we haven't really started marketing the business as such, but we will be to sort of cater to the early adopters, especially in the NRI segment, right? Where people in India have their relatives abroad and they might want them to come here for certain surgeries, etc. That will be a digital push that we will be doing through a lot of content marketing, a lot of partnerships with the right hospitals, building a lot of content with the hospitals and the doctors. I think that will be the key sort of channel for us. And look, outside India, we're doing a lot of offline stuff as well, because again, it's healthcare. It cannot be just digital over a Facebook or an Insta ad, right? You need to meet people. So we're participating in a lot of events in the UK, whether they are customer facing event or doctor facing events, because we're building a lot of B2B doctor partnerships as well in the UK, where we get a lot of patients from.
Awesome. Sahil, thanks for coming on the show, and looking forward to you crossing many more milestones and coming to discuss all of that with us as well at UN. Thank you. All the best.
Thank you.
All right, listeners, 1 week to go for Diwali. This was the final stream that we do before Diwali. We want you to have a fun-filled Diwali with your loved ones. We'll be back on October 24th. Today, you've heard from two solid founders who came and unpacked what's happening behind the headlines, and that's what we strive to do best at TON. Please leave us feedback and have a good Diwali. Cheers. Bye-bye.
Cheers. Happy Diwali.